Raamdeo Agrawal joining us on the conversation this morning, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agrawal, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure on what is turning out to be perhaps an exciting morning, more optimistic than we would have thought at the start of this week.
Hello, yeah, good morning. So clearly things are kind of evenly balanced, and there's a lot of hope that the FM is going to shower goodies for the middle class and women class. That looks to be what even PM's expectation is. So I would think that the commitment to what you call Viksit Bharat, that's coming out very clearly, and one of the ways to increase the GDP growth rate from say 6.5% to maybe 7.5% would be the giving some kind of incentive to the middle class for consumption. That looks to be the theme right now.
And do you think that that's the single most important perspective? I'm just wondering, on a budget morning, and we're speaking half an hour before the budget, what does a Raamdeo Agrawal have on his checklist to look at? Will you be looking at the capex figure, the fiscal deficit figure? What is that top point that you're looking at?
Yeah, so I've noted down 3 points. One is the middle class, what exactly they end up doing for the middle class, and where FM has said, clearly PM knows what exactly is going to come. So his wishes are around middle class and women class and poor. So clearly we are going to see some bundle of measures out there, whether it stands up to anything in the market or not, that's one thing. Second is the commitment to 8% growth, whatever it takes. I mean, it is for the leadership to say that we are committed to 8% year on year. There will always be some cost here and there, but growth solves a lot of problems. So how committed they are, bureaucracy as well as the policymakers and leadership, to 8% thing. Third, the credit flow. I think one of the biggest things which has hurt the economy in last 12 months, in my limited understanding, is the credit flow into the entire economy, which has come down from 15-16% to 10-12%. If we remain at 10-11%, do whatever, I don't think we'll ever touch 6.5%. That's my sense.
Okay, Mr. Agrawal, good morning. Neeraj here. I love the backdrop. Budget bullets. Maybe dodge any bullets that might come our way if they do. But here's my question, sir. One of the things that some of the panelists have stated today, of course, the unequivocal focus on growth, and therefore, if the FM and the government, or the FM in her wisdom, decides to deviate a little bit from the fiscal glide path, if that shows an intent to invest for growth or creating demand. So if the next year's number is not 4.5, right, and it says that it is being done to stimulate growth, will the markets take it well, or will the markets be disappointed?
I don't know about the market, but I'll be very happy. In the sense that, to me, growth is paramount, and if you can do fiscal, to me, if you can do the growth and then consolidate fiscally, that'll be very good. But I would not put fiscal consolidation as a priority over the growth. Because once growth comes, even fiscal consolidation is possible because your tax revenues, they get boosted.
Okay, that's one. And something that I'll ask Mihir Vora also, but just a follow-up question to that, Mr. Agrawal. We want to do a lot of things. There is very limited resources as well. This time around, we know that this year the revenue picture also has not looked that strong, right? So let's assume the fiscal path is maintained, if you will. There is not, I mean, we haven't done enough capex, and let's assume that number stays as is and doesn't really increase too much, if you will, and therefore misses the budgeted estimates too. Will that be a disappointment, or will that be a need of the hour because revenues also have been lower?
I mean, let's see the actual number, what comes out. My sense is that if they're able to boost the GDP growth and nominal GDP growth rate, even if with a little higher inflation of about, say, 5%, I think they will have enough revenue. And so they will have enough resources if they want to do if they want to maintain and actually increase nominally the capital expenditure, because the best place where the capital expenditure will give rewards to the economy is going to be infrastructure, and that only government can do. So clearly the momentum which we are seeing in last few years, where government is coming very aggressively onto the infrastructure side, that momentum should be maintained, and if anything, whatever was the budgetary provision last year, the next year should be somewhat higher, at least 10-12% nominally, so that it may remain percentage of GDP same, but nominal value will be 8-10% higher.
The other piece, Mr. Agrawal, that from a market's perspective, what does it look to? The last few years have seen this unequivocal focus towards creating manufacturing assets, giving PLI schemes, etc. That may well continue. But if there are tax changes or other changes done in order to boost consumption, all right, and boost household income, does it change the texture of the market in that the market starts rewarding consumption themes, staples, what have you? And is that fair too?
See, Neeraj, actually market is looking for earnings growth. I mean, from whichever sector it comes. It is not necessary from the only consumption side the earnings growth should come. If aggregate earnings growth, which is now flattened from last year 1,000 rupees EPS for Nifty, it has come to about 1,050 for the current year. Next year, if it doesn't scale up to 10-12% from 1,050 to say more like 1,200 or 1,150, I think market will not be excited. So it doesn't matter from which sector it comes, whether it comes from infra side, consumption side, energy side, you take your pick from which side it comes. But my aggregate earnings growth should be more like, I'm speaking as a capital market guy. If my earnings growth next year looks to be, my head of research revises the earnings growth projection for 25-26 to by 12-15%, that will be the big day, whether it comes by tax cut, whether it comes by earnings growth, I mean per se top line growth, or margin expansion, that is all, but 12-15% earnings growth next year is almost a must to hold the markets at 23,000.
Okay. I'm just on earnings growth, Mr. Agrawal, want to get your view. If there's a scale of disappointment or optimism, how are you feeling from what you've seen so far? Because Q3 and second half was supposed to be the better picture being painted. This is what we all heard in the end of Q2. What have been your thoughts when you've seen the earnings growth? Because at the end of the day, budget will go one-day affair. After that, you will have Trump doing whatever Trump does. But this is the core number that we need to watch.
Yeah. So clearly last year, if you see the economic survey, Mr. Anantharaman has gone about saying that the slowdown is not structural, it's seasonal, in the sense that because of elections, the government capex slowed down, at least in the first 9 months, and that has led to whatever Q3 5.4% or somewhat like that. It's not a structural slowdown in the economy, it is more of a seasonal, and that's why in one of the interviews I heard yesterday, he said, of course, in the economic survey is written that their expectation is about 6.3 to 6.8, but he's the guy who is insightful today, because he has written the whole thing. So my sense is his expectation of about 7% for 25-26. I would think that he would be on the right line of thinking, and if that 7% comes with 4.5-5% inflation, I think we'll have good time. In the sense that corporate earnings will pick up by more than 12-15%.
Got it. Mr. Agrawal, I have one final question, and that is not necessarily budget linked, but you could argue it's budget linked. And I'm saying that let's assume the budget dishes out most things that you say, if not all. I would love to know at the start of 2025, how bullish, bearish, neutral is Raamdeo Agrawal from a 12-month perspective. I know you're very bullish over the long term. Just trying to think for the slightly shorter term, which is 12 months.
Yeah. So 12 months looks to be, I would not be very bullish, let me tell you. I would be a little more on cautionary basis, in the sense that I would expect about, first half I would not be that bullish, but second half I'll be very, very bullish. So on the whole, for the year, with little pain in the beginning, I think we should do well. And so I never, so I would be cautiously optimistic for 25, 26, particularly back-ended.
I want to get your view, Mr. Agrawal, on what we've been seeing in terms of tariffs. And while, if I would look at it from three factors: one, what the government does; one, what corporate India does in terms of its earnings and its performance; and then one is geopolitical. And geopolitical factors are going to be dominated by tariffs. All the announcements this morning, how did you look at it? And is this an opportunity for India or a threat?
I think it will be both ways, in the sense that I think it will be more of an opportunity, because the big daddy in the global manufacturing is China. And if China is being restricted, clearly the tenor of Trump's tariff policy looks to be make Chinese imports a little uneconomical, so that the local manufacturing becomes a little more viable. To that extent, if there's not so much of tariff on Indian imports, probably it will be a huge tailwind, longer term tailwind, for Indian manufacturers to step up their effort and export a lot more to the US. But that looks to be pretty, simple analysis of what is going to come. It's a very complex thing. We have to play as it comes. So let's not speculate anything till final things have come.
Okay, fair enough. We don't know yet. I mean, if tariffs for China, good for India, we don't know what's going to happen from the Indian perspective. But in the context of this budget, Mr. Agrawal, what do you think we need to see? Would you wait to hear some clear policy direction there?
Yeah, so clearly, as I said, their ultimate North Star is the Viksit Bharat by 2047. And it is very well clearly laid out that compounded growth of about 8% is required. We are at about less than 6% right now, as it turns. So you have to have very clear policy guidelines. And I mean, where there is will, there is a way. And once Mr. Modi has set his eyes on Viksit Bharat and 8% growth, all the forces and the policy making will come together, whether it is a deregulation of the businessman or ease of doing business, regulators coming, little soft pedaling on the operators. I mean, say like credit flow into the economy. Once you slow down the credit flow into the economy, a lot of other measures don't work. So I think first they have to do the plumbing of increasing the credit flow into the economy. And that, I think, at least economic surveys talked about it. Let's see whether it comes or not. Or maybe it may not be in the budget, but at least follow on to the budget. There could be rate cut. There could be, I would expect a lot more monetary action than the fiscal action as we go forward in next 1 month.
Just, I know we've been saying one last for a while, but this is really the last one. I'm just wondering, how are you looking at the pain point in the markets right now? And do you see Feb 1st and then Feb 7th, after the monetary policy, opportunity for a pivot here? Just wanting to get what's in your head right now when you think about where Indian equity is going.
Yeah. See, broader market last year, actual portfolios did very well, like anywhere between 35 to 40, 50% return on the back of the broad index doing just about 8-10%. So clearly we have beaten the index last year. This year, I think index will come and beat us all. So most likely, it will be very tough for most of the active managers to beat the broad index. And hence, there could be a churn from mid and small to large cap. But that happens only when foreigners, they start buying big time, because they love to buy large cap, and large cap valuations have become very reasonable. So let's see when the tide turns, and it turns when you don't expect it. So quite possible times are coming when things may change and surprise us the pace at which it changes. So I would think that there are a lot happening in the Indian economy. Large caps are reasonably priced. Mid and small are still slightly elevated, and that IPO market is kind of bringing it down one by one, because the offerings are there relentlessly. So it's one of the hottest IPO market. I think one of the things which I didn't say, and I think it didn't come even in the economic survey, is the flow of the risk capital, unprecedented flow of risk capital in the economy, if it is harnessed well, it can change the complete trajectory of economic growth and the pace at which we can develop. So that is what is going to happen in next 1 or 2 years. And I would like to see how the FM helps that flow and uses that risk capital flow into the economy very, very creatively.
Well, let's hope a lot of these wishes turn out to be true. Mr. Agrawal, thank you so much for joining in today and giving us your thoughts. Really appreciate your time.
Thanks.